What is going on, investors? Hopefully, guys are doing well out there. That is right. It is Friday. The weekend is here. It's time to get excited because the Fang Stock Recap Show is here as well, where every Friday we recap all the major news and the technical chart patterns from all the major Fang stocks, including Microsoft and Tesla. This week, we've got the end of calendar Q1. So we're going to look at these stocks not only from a 5-day perspective, but we're going to see, as most of you are aware, these stocks have been rocketing year to date. So we'll take a look at both price action, but we kick things off like we always do with Meta Platforms. Started the week at 203, up over 4% to finish the week, very close to $212 per share. Year to date, this thing is up nearly 70%. That's after a TikTok ban could be a matter of when, not if, after the CEO testimony last week. Obviously, a lot of times in Washington, they ushered these things up. Everybody gets their soundbite. People talk about it for a day or two. And then some real stuff actually has to happen for a TikTok ban to actually materialize. In an election year, it's not an election year this year, but we're kind of on the eve of an election year. I don't know how much political will there will be to actually ban TikTok outright. I think a sale to either an IPO process or a North American company would be beneficial for everybody involved. Meta said to be lowering their bonuses and offer more frequent reviews in their year of efficiency. They're not going to let you just sit around and drink $8 lattes and $25 avocado toast anymore in Menlo Park. They're going to actually make you work over at Meta. And I love to see it. Look, there are so many talented people that work at these companies. They need to be motivated, okay? It's just like an NBA player. If you're in the NBA, you're talented, but if you don't have the right coach behind you and the teammates pushing you, then you're probably not going to meet your full potential. And that's kind of what I see at these companies. They've got a lot of potential, but they haven't been motivated and pushed. And that's kind of what we're seeing with these cost-cutting efforts. I think great things coming when it comes to Meta. Moving on to Apple, start of the week, closer to $160 per share, and the week over 3% higher to finish the week, very close to $165 per share. Year to date, not quite as good as Meta, but I tell you what, a 30% gain on a stock worth over $2.5 trillion is just a massive, massive move. Apple is winning a UK appeal squashing a probe into its mobile browser dominance. Now, they won this on a technicality. Apparently, there was some kind of statute of limitation that had ran out, and this just goes to show you, folks, that the corporate lawyers are 99 times out of 100 are far better than any attorney that works for some government agency, because you can make millions and billions of dollars as, maybe not billions, but you can make hundreds of millions of dollars as a corporate attorney. Whereas if you work for the government, there's probably a limit to your pay scale there. And so Apple winning in the court of law, that's why we love to see these things play out from a corporate perspective, because typically, the corporate attorneys are a lot better than the regulators. Apple buying Disney? That is a question mark. That is according to Needham, saying that they're worth more together. Now, I believe there's parts of Disney. Like, if Apple wants to make a big acquisition, they certainly have the cash. They could leverage the balance sheet. They could do a number of different things to get this done. Now, do I think Apple needs to run Disneyland? Do they need to run the cruise ships? Do they need to run even maybe like the Disney network? No. There is a piece of Disney that Apple absolutely should consider purchasing, and that is actually ESPN. Apple is one of the few companies in the world in the next, we'll call it 2 or 3 decades, that is actually going to be able to afford the sports rights. Okay, these sports rights cost more than buying a couple of teams in the league. Apple is one of the few companies that is going to be actually paying up for this. And so I actually think buying ESPN, maybe even ABC, maybe having some other assets, it'll be interesting. This was floated out there. I don't necessarily think this will happen, but obviously if it does, would create very intriguing business combination. Apple's annual developer conference will start June 5th. I got an email on that. It looks like it's going to be a little bit online, but also in person as well. I note this because usually there's some kind of product announcement at these things. Sometimes it's an iPad, sometimes it's a Macintosh. Usually you get software as well, and sometimes that is very impactful on some of these other companies. I believe iOS 16 or maybe it was 14 was rolled out that had all those privacy changes that really impact impacted Meta and Google to a lesser degree, but also Snapchat and Pinterest. So we'll keep an eye on that as that date gets a little bit closer. Affirm and a lot of buy now, pay later stocks, although I see Affirm rallied over 8%. I mean, Wall Street's in a rally mode when Affirm goes up 8% in a day, but earlier in the week, it was down 11%. That is because Apple rolled out a buy now, pay later service inside the Apple Wallet. Now, I don't think they've rolled this out to everybody. You have to have the latest software, and I believe you obviously have to have maybe a decent relationship with an Apple Card or the Apple Bank. The interesting thing about this is Apple is actually the one underwriting a lot of this. So we talk about all the time when we do Apple earnings in about 30 days or so, we'll talk about how much cash they have sitting on the balance sheet. Well, here's a use for that cash. They're actually going to be underwriting their own buy now, pay later loans. And now this is not just for Apple products. This is for anything that accepts Apple Pay or maybe even on the Apple Card as well. I haven't been able to get access to this. It's something that maybe I'll utilize. But I tell you what, if I was one of these other buy now, pay later stocks like Affirm, like Square, Block that has its own problems with that Hindenburg report that got dropped last week, I'd be shaking in my boots. I would not want a very well-funded competitor in the pockets of most of my consumers with the buy now, pay later option. Apple acquiring an AI-linked video startup, Wave 1. They do compression on video, which is really interesting. Obviously, Apple moving largely into video and video streaming, particularly when it comes to live sports. So my guess is the acquisition is related to that. The global continuous glucose market, that is going to be hitting $32 billion by 2031. We bring this because Apple is rumored to have potentially that integrated into the Apple Watch at some point. We'll see if they're able to pull that off, get FDA clearance and basically sell the watch as maybe a medical device, maybe even have it being covered under some insurance as well. But I tell you what, a $32 billion market, if Apple can carve out a little bit of that, certainly for a $2.5 trillion company, maybe not tangible, but it would show up on the balance sheet. Moving on to Amazon, start of the week at $98. This one's in rally mode, up nearly 5% to finish the week, over $103 per share year to date. This one's been catching a little bit of wave, up over 20%. That is Amazon. Amazon is facing more strikes in their UK warehouses. Talked about this a couple of weeks ago, how these workers are demanding. It didn't sound like they were demanding that much, and we're not talking about a large amount of workers. We're talking about 560 here. Obviously, this is, I wouldn't necessarily a threat, but it is something that Amazon is going to have to deal with, not only in the UK, but also likely the United States. Now, I did a video on this earlier in the week as AMC, yeah, that meme stock AMC, it jumped a little bit on a report that Amazon is exploring a potential acquisition. A lot of people brush this off as that maybe this kind of a pump and dump, attempt from AMC. I don't know. I think the most interesting, look, if Amazon buys some movie theater chain, it's a rounding error, okay? I don't care what they pay and what movie theater chain they buy. It's a rounding error certainly from a revenue perspective, maybe not from a profit perspective because Amazon doesn't generate a ton of profit. But look, this is a company that is $500 billion worth of revenue. There's no movie chain in the world that is doing enough revenue to move the needle on $500 billion worth of revenue. But I thought the rumor was most interesting because it says Jeff Bezos is kind of behind the scenes there, maybe organizing some kind of acquisition push. And if that is true, Jeff Bezos being actively involved in Amazon, based on his track record, probably a good thing. Moving on to Netflix, start of the week at $328. Boom, this one just a beautiful technical segment on Netflix. Up over 5%, finished the week at $345. Year to date, I actually thought this one would be up more, but it caught a wave a little bit sooner than these stocks. This one's up about 17% during the first quarter of 2023. Netflix is reportedly scaling back on its movie development amid restructuring. They're going to cut some mid-sized movie productions. They're going to cut some jobs. They're going to slow the pace of movie making and just kind of tighten costs over at Netflix. And I got to respect this. When you go through Netflix financials, which we'll do here likely in just about 2 weeks' time, they're the only ones making money from streaming. Disney's not making money. Warner Brothers is not making money. Like, no, Roku is a disaster. Like, none of these companies are really making money consistently streaming. Netflix is doing that. The fact that they're cutting back tells me that the rest of the industry is likely going to have to follow suit, because if Netflix isn't going to make money, then the rest aren't either. Now, moving on to NVIDIA, prepared to be impressed by these gains. This thing started the week at, we'll call that 266, up another 4% to finish the week at a very lucky $277.77. And year to date, it has been a straight rocket higher, up over 94%. Folks, yeah, in 3 months, NVIDIA is up 94%. I think it's pricing in AI taking over the world, in my opinion. NVIDIA and Adobe events show off new AI enthusiasm, and I was so impressed. I always watch the keynotes with NVIDIA, so impressed with what they have to offer. Their integration with Adobe, their integration with Getty Images, which we talked about from a generative AI kind of perspective, where you're going to be able to take this photograph and say, change the background to white, change the man's hand to a woman's hand, and make the fingernails pink. You're now, instead of having to work through that all on Photoshop and have to kind of churn through that, you're just going to be able to type that into a computer, and the computer is going to do it for you. It's going to be fantastic, and it's going to change a lot of things from a workflow perspective. Moving on to Google, started the week at 104, slid sideways. End of the week, we'll call that 104. Year to date, this one also doing relatively well, up over 16% in just 3 months. Google has accused, this is rich, Google is accusing Microsoft of anti-competitive cloud practices. This is kind of like that kid in kindergarten that's constantly like bullying another kid. And then the minute one of those kids kind of pushes back at them, all of a sudden now he goes to the teacher or the principal and says, oh, they're bullying. It's like, come on. But I tell you what, the rivalry between Google and Microsoft clearly heating up. These companies are going to be in a major battle. I think both are going to be able to capture a lot of market share. Judge rules Google should be sanctioned on evidence in Epic Games case. So essentially what happened in this case, and it also is relating to other cases revolving around the DOJ, Google wasn't really being that careful with retaining records. So apparently chat records between employees were lost or deleted, and some of it may have even been suggested by Google. So Google, from kind of a corporate like governance perspective, definitely not playing fair, and I would suggest Google kind of clean those things up. It's a bad look. Alphabet, which is Google, pushes for dismissal of a DOJ antitrust suit over ad tech. This is just another one of those kind of antitrust cases that are, making their way through the court systems. Again, you're going to have corporate lawyers versus DOJ lawyers. I will take the corporate lawyers, but in this case, the DOJ probably has a case, and we'll see what happens here. What's interesting is if Google, the worst case scenario is the DOJ wins these antitrust suits and it's ruled Google's got to break up. Well, look what happened to Alibaba when they announced that they were going to break up into 6 different companies. And that's the case with actually a lot of these companies, particularly Amazon, probably Google to a lesser degree. I would say out of all of these companies, if you were to break them up into just kind of little pieces, Amazon would probably be the one that would benefit the most because they have so many different business units. While they all are related to a certain degree, they all could potentially stand alone. And so if we do have a really heavy hand from a regulatory perspective, which I'm still not convinced, I think it's mostly rhetoric when it comes to these types of things. And I think most of these companies are going to get off with fines or maybe some concessions when it comes to this government stuff. But interesting what happened to Alibaba stock and the interest in that in those shares. Interesting when they announced that split up, the stock just surged. Moving on to Microsoft, started the week at 278, up nearly 4%. Finished the week very close to $290 per share. Microsoft up over 20% during the first quarter. ChatGPT gets a temporary ban in Italy for privacy issues. You think so? There's going to be a lot of this stuff kind of rolling down the pike as we're, I don't even think we're in the first inning of AI and kind of ChatGPT. I think we're still like warming up before the game, if you will. Microsoft debuts new AI chatbot for cybersecurity needs. I tell you what, there's going to be an AI chatbot for everything in I think 365 days from now. It's literally going to be a chatbot for just about everything. Activision stock rose earlier this week. This is key for Microsoft and Activision as well, as a Japanese FTC says the Microsoft deal doesn't limit competition. This deal is just walking closer and closer. I'm seeing Activision shares now closer to over $85 per share. So that's very close to the acquisition price. I think they were down in the 70s not just a couple of weeks ago. I believe Warren Buffett took a arbitrage bet in that one. And I tell you what, if you're on the side of Warren Buffett, typically it's the right size. Microsoft discloses Teams, which is their kind of Zoom competitor, if you will, has over 280 million active users as the company launched a new version. And I don't know if you guys got to see this. I was going to do a video on it. I just couldn't really put one together. But I tell you what, what's being involved in integrating in Teams, they're going to summarize your meetings for you. There's going to be translation. This AI chatbot's going to be sitting on the side and kind of helping things out. The way they're going to integrate a ChatGPT, or they're calling it Copilot, over at Microsoft into their suite of products, I think is going to make their products not only more competitive from Microsoft perspective, but it's likely going to put pressures on the Zoom videos, probably the Salesforces as well, and maybe many other companies out there. 80% of the workers in the United States could be impacted by advanced chatbots. And no, this is going to happen. Microsoft showed off last week. You are going to get email in Outlook, and the AI chatbot is going to read the emails for you and essentially respond to you. I think we're probably still a year or two away, but insurance companies, medical billing, medical insurance, any kind of customer service that goes over email, a lot of that is going to be generated by AI. And so, yeah, maybe you have one person or a couple of people overseeing these things, but man, those industries, especially insurance, that relies so much on email communication, those businesses are going to be turned upside down in a good way. Okay, yeah, if you work for some of these places, you might lose your job. Your job role and your job function might change, but studies are showing that over 80% of U.S. workers, which again, we are a service economy here in the United States. And so, yeah, I truly believe, and this is what has me so excited about stocks like Amazon, like Disney, like Netflix. That is because the chatbot isn't going to stop you from buying stuff on Amazon. The chatbot actually might free you up to give you a little bit more time to spend with your family so you can go to Disneyland or watch a movie. I actually think it's going to be, yes, there's going to be so many innovations when it comes to ChatGPT. There's going to be tons of money to be made from an investment perspective, but I actually think the industries that don't get disrupted might be some of the best investments, okay? People are going to have more time. Businesses are going to be more efficient. It's going to be deflationary. It's going to raise profits. Yes, there'll be some disruption when it comes to workforce out there, but I am very bullish. Physical products, touch grass kind of physical experience companies based on this ChatGPT. I'm going to watch this play out over the next 365 days. I think there's going to be some great investments there, but in the meantime, I think that touch grass kind of retail products and those companies are going to do great because they're going to be impacted far less by a chatbot. Moving on to Tesla, start of the week at 195. Finished the week up over nearly 6%. Finished the week close to 207. I remember I had people in my comments, they were just crying like little babies, saying, I can't believe I took your advice on Tesla. Well, guys, Tesla is up 91% year to date. 91%. Tesla issues first recall for Semi due to a brake defect. I thought, so look, it's a new car or it's a new truck, in this case, new platforms. You'd expect these types of things. I've never met a car maker that's never had a recall. Obviously, we don't want these things happening, particularly when it comes to parking brakes and the truck can roll away. I think Tesla should do a little bit better job in these types of things. But the most interesting part of this whole thing is we kind of get a total number of units that are potentially affected. We're talking about 35. And so kind of a rounding perspective from a revenue perspective, and certainly a company worth over $619 billion. They got to sell a lot more than that. Elon Musk is reportedly planning a a China visit, and he's going to meet with the premier. Look, this company is married to China. I think nearly half of its revenues are coming from that company or that country. And so he's got to play this kind of tap dance game and kiss up to them. I believe Tim Cook was in China this week doing the same thing. Tesla is reportedly eyeing a U.S.-based battery plant to go along with CATL. They were in Washington. I'm referring to Tesla, double checking with the White House based on the quote Inflation Reduction Act. There's lots of different rules, and there's a lot of been clarity that's had to come from those when it comes to government funding, government subsidies. Tesla, one of the best in the business at using the government's and people's money to build their business. Got to hand him to that. Elon Musk, this was incredibly rich, I thought. Steve Wozniak, who's one of the original founders of Apple, joined a call to pause AI development. This is rich because imagine there are plenty of people doing this today, but certainly in the beginning when you started to do full self-driving or autonomous driving, okay, Tesla's kind of been more or less on the cutting edge of self-driving and giving that right to the hands of consumer. I mean, I drive my Tesla all the time, and I'm not really driving it a lot of the time. This would have been similar to, another billionaire, another car maker, or somebody saying, hey, we should pump the brakes here on this autonomous driving effort and this autonomous driving aspect to these cars. Well, I think it's rich that Elon Musk wouldn't have gone for that. He would have been like, no, we gotta push these things along. Same thing with AI. I think, look, the guardrails are off. I remember when the internet was kind of quote unquote being born, if you will. The guardrails were off for a while. People will figure these things out, but you don't figure things out by stopping going forward and stop moving in a new direction. You've got to just keep going. Things are going to break. Things are going to fall off the bridge, but you got to keep moving. Elon Musk offers Twitter employees stock grants based on a $20 billion valuation. This is interesting because he paid $44 billion for the social media service. So you'd think he's underwater just a little bit there. We'll get to NVIDIA in a second. That has made a V-shaped recovery, which is just absolutely spectacular. But we'll kick things off on the technical segment of the show when we look at the S&P 500 making just a beautiful, we're making a beautiful series of higher lows here. We have our blue box in here, which is a 14% trading range up or down. We've literally been in an up or down 14% trading range for essentially a year now on the S&P 500. We are working our ways towards the top. Those of you that are just so utterly scared of Jerome Powell and the bank scandals and any of this kind of doom and gloom stuff, you need to be selling up here. This is where you sell. We are heading into earnings. Earnings season starts literally 2 weeks from now. Makes a lot of sense. Stocks set up towards the top. We'll see what happens during earnings season. We'll see if that's enough to push this higher. We're looking for, from a technical perspective, for this uptrend to just continue. You're looking for just a mild push higher up to about 4,200 on the S&P 500. Another 100 points would just confirm that this uptrend is intact. Again, those of you that are concerned about a recession, a depression, or whatever, you listen to Michael Burry, you're listening to the dozen or so YouTubers here that constantly are, calling for some kind of massive decline in equity prices after they've already had a massive decline and they've simply been in a 14% trading range. Again, this is the moment when you need to start selling. I've had a call numerous times to talk about gold. Gold is at a decision point. This is GLD, not actually the physical asset of it. But look, you kind of have areas where it kind of tops out. Gold tends to kind of blow off the top. It's done that numerous times over the past couple of years. Right at this, we'll call it 190, or I think it's like 1900 on the actual physical asset. We're right there. This is usually when people say it's going to go higher and higher, and that's when gold actually pulls back. Surprisingly enough, I actually have more assets in gold. I have more physical assets than I do the stock market, and that's not financial advice. I don't want you to copy me, but the equity in my house, other real estate that I own, gold and silver, jewelry, watches, it dwarfs what I have in the stock market, believe it or not. Now, moving on to Meta. This one's I mean, this one's just on a rocket ship. It's moving our way up to, there should be some overhead resistance right around the 220 area. If you look, a lot of you guys that, piled into the stock, you have these huge gains. If you do want to take profits, look, the area to take profits, if you're like me and you took profits like $30 ago on this one, you're kind of waiting for a pullback. We're very close to earnings on this stock. This stock and a lot of stocks report their earnings next month, April 26th to be exact. I think we're going to set up towards the top, and earnings will be kind of a decision point. I think we've priced a lot in over at Meta. Now, this purple trend line is likely going to give back at some point. This kind of skyrocketing purple trend is likely going to give back. And so the first area of pullback back to 180, but I've left this green trend line in. I actually think we probably still close this gap at some point. I think you're going to get an opportunity at this one south of 180. If I'm wrong, look, it is what it is. You should be invested in other stocks out there, including maybe a Google. And so if Meta continues to run, well, other online advertising companies likely to run as well. Now, Apple, speaking of run, this one is started to go parabolic. Okay, so this gold line is gone. And look at the move we've made. I mean, back here in January, we were down here at 125. Everybody was crying, and it's literally been this straight arrow V-shape recovery. I would not have predicted a V-shaped recovery on any stock, particularly Apple, but we're still not out of the woods yet. You still need this one to get up to 175 to really just prove something other than this technical kind of sideways to down chopping action is still not intact. And so it's decision day also with Apple. Now, complicating the matters is, again, about a month from now, almost on the dot, on the 27th of April, we'll be getting some earnings. And so can we power up through 175, 180 into earnings? If you do, those earnings better be pretty darn good, because that is pricing in quite a bit. I would expect a pullback with Apple in the coming weeks, or I've been expecting a pullback with a lot of these stocks, but they continue to move higher. Pullback south of, we'll call it 150 are your buying opportunities, in my opinion. Now, moving on to Amazon, it's just sitting right here at, we'll call it 103. It's not alarming by any stretch. I mean, you are making a beautiful series of higher lows here. This one actually looks like, if the momentum stays, you're probably moving another 10 to 15% higher in this one. Retesting areas above 115. You would love to see that from a technical perspective, but Amazon looking decent enough from a technical perspective, although it's at an area where it has gotten rejected. And so we'll see how Amazon follows through. They report their earnings on the 27th of April. Moving over to Netflix, just a beautiful technical pattern. Topped out back in February up here at 365. Gave a lot of that back. Came down here south of 300, but hit a perfect technical area, and now we're kind of bouncing. This one is looking like it wants to just trend back up. It reports about 3 weeks from now, on the 18th of April. What this one looks like it wants to do is just come back up here, making another new high up here in the 380s. So I tell you what, you got another $40 probably in runway when it comes to Netflix. Moving on to NVIDIA, you want to see a V-shaped recovery. Here it is. You've got your down leg, and then you've got your up leg. And I've had people ask me, should I sell? Should I take profits? I don't know, guys. When you got this kind of momentum, you just let it run. When you have winners, you let them just run. Now, that doesn't mean that you let it run and then give 40% of it back, which, look, NVIDIA could give back 40%, and it's still in just the most impressive V-shaped recovery uptrend. And so that's personally what I'm waiting for, some kind of give back. The complicating the situation. Now, you will have AMD earnings sometime next month. You'll have Intel as well. Both of those somewhat related to NVIDIA, although NVIDIA is kind of in its own separate space to a certain degree. It's probably more comparable to AMD than it is Intel at this point, but they don't report, and I'm referring to NVIDIA, they don't report till the 24th of May, and so you've got some time here. But yeah, this is pricing in a lot. Yeah, when you have a 90% move in 3 months, it's nice to take some profits, but let her run. Once you break trend, that is when I think about selling, okay? The trend is a straight arrow up. So any kind of meaningful pullback, we're talking from, like, in the shorter term, like if this thing were reversed next week, from 280 back down to 250, that would show me like, okay, the sellers are starting to materialize. But right now, like nobody is selling this stock. And so it just is going to continue to move until the sellers will materialize. They just haven't yet. Now, moving on to Google, looks good. Didn't really confirm. We really wanted this one last week to push up over this grouping of highs, although we're talking about maybe when we're on a daily chart, it's not that convincing. Would have liked to see this one get over 108. Now, it still can do that. We do have earnings coming up on the 25th of April with Google. Still looks good, okay? You're making a series of higher lows, series of higher highs. Wasn't it perfectly confirmed this week, but it's still moving in that direction. This one's looking pretty good. If it carries on with Meta's momentum, you're probably looking at a move higher. Now, moving on to Microsoft. Also, this stock has also gone pretty much parabolic. I mean, we were down here back in January at 222. And now here we are at, I don't believe it. I mean, it's like 288. You're retesting these highs, which I thought may have happened later this year. For them to happen in March, it just really pulled forward. I thought the back half of the year we would have this type of move. I thought we would kind of chop around, maybe have a little bit more time to accumulate these stocks, but we've really pulled that forward. And so we'll see. I'm going to have to adjust my back half of the year outlook because we've pulled forward just so much stuff with a lot of these stocks. We're retesting these highs at 294. I mean, this trend, that's over. That area of support is almost not there. I mean, really what you're looking at is either a trend that starts to look like that or starts to look something like that. I mean, this red trend line is kind of shorter term, but this is, I mean, look, if you look at the NVIDIA chart, it's telling you these stocks can V-shape recovery. Now, also V-shape recovery in Tesla, but Tesla's been in a very tight trading range. Tesla actually tends to do this. It has these big swings and everybody starts crying and, oh my gosh, I can't believe I bought this stock. Elon Musk, you're such a little weenie. But then it kind of tightens out. And really for the last 2 or 3 months, actually, we've been kind of really just chopping up or down maybe about 20%, which seems like a lot, and it is, but on a high beta stock, high volatility stock like this, very much in the range of possibilities. Now, what you'd like to see with Tesla, you got to burst out above 215. Tesla's a long ways away from proving it's out of its, still in its kind of intermediate term downtrend, which is represented by this line here. You're just making a series of lower highs. And until you get above these highs back at 300, very similar to situations to what we are seeing with Apple, you've got to get above the other previous highs to really prove something is different. But Tesla more specifically is really just in this trading range right here. We're talking about, yes, it is 50% up or down, but we are actually towards the bottom of it. But for the most part, Tesla has been in a sideways trading range. Yes, it's a 50% up or down move on these things, but it's more or less been sideways, honestly, for a considerable amount of times. Folks, that was the FANG Stock Recap Show. The first quarter is done, and these stocks have just rocketed higher, including Meta over 70%, Tesla and NVIDIA up over 90%. What are these kind of companies going to have to do in the upcoming quarters to maintain that top performance, if not push it higher? I think it's a stretch, but we'll certainly be here on the channel to cover it either way it goes. Hopefully you have a wonderful weekend out there. We'll see you again soon. Good luck with your investments.